A 6.5 lakh crore rupees salute yesterday, and today the Lal Street added another 4 lakh crore rupees in market capitalization. It's barely been 24 hours since the union budget, and there is no stopping the stock market rally. Over 10 lakh crore rupees added to investor wealth as things stand. But stock markets aside, the finance minister has made it clear that the government will spend and spend and spend to get the economy back on track. The industry has had some time now since the budget to digest the fine print. So does India Inc. believe the budget does enough to support growth? Welcome to CNBC TV 18's Budget Town Hall. I'm Shireen Bhan. We will be joined by captains of Indian industry to quiz the key architects of the budget. Joining us on this very special program, Ajay Bhushan Pandey, the Finance Secretary. Also with us, Tarun Bajaj, the Secretary Economic Affairs. And quizzing them will be V. Vaidyanathan, MD and CEO of IDFC First Bank, Dinesh Kanabar, the CEO of Dhruva Advisors, Sanjeev Bajaj, CMD of Bajaj Finserv, Dr. H. Sudarshan Balal, nephrologist and chairman of Manipal Hospitals, Chandrajit Banerjee, Director General at CII, Ameera Shah, Managing Director of Metropolis Healthcare, and also with us is the big bull of the Lal Street, Rakesh Jhunjhunwala. Ameera, gentlemen, many thanks for joining us, Mr. Bajaj and Mr. Pandey. I know it's been a long innings for you. I'm going to request you to be patient with us and take on a little more of your time and attend to some of the questions that industry has here. Well, if Sanjeev Bajaj can hear me, Sanjeev, can you hear me?
Yes, I can hear you clearly. Let me just start by saying that as industry, we welcome this budget. We know the big pressures it had placed on the Ministry of Finance and the way the ministry has come out with a balanced budget meeting the requirements of so many people in society and industry. We compliment them for a very progressive and practical budget that will go a long way to infuse confidence. We actually, from industry's point of view and from CII's point of view, we had presented to the government what we thought should be a 3-year glide path towards coming back to better fiscal management. And what we see instead is a 5-year glide path. So my first question would be, what confidence does do the officials of the finance ministry have to ensure that a 5-year period is a sufficient period for us to come back to fiscal prudence, and that both on the growth side as well as on the collection side, we will meet progressively over this period of time the different interim steps in the fiscal deficit?
See, the estimate that we have given, both on the expenditure side as well as on the revenue side, they are very realistic. So far as the current year is concerned, we have already passed the 10 months. 10 months we have a fairly good idea of how much we have collected and how much we have spent. Now similarly for the next 2 months, how much we are going to collect and then also how much we are going to spend. So therefore, what we have tried to do in this budget is that we have transparently put the revenue side as well as the expenditure side, and then from there this fiscal deficit, the number, that 9.5 that has come in. Now so far the next year is concerned, the next year, if you see our growth estimate on a nominal terms, it is somewhere between 14 and 15%. And what we have done, going by the current trend of the tax revenue collection as well as the non-tax revenue collection is concerned, in both front, we have made a realistic estimate. The growth figure, nominal growth, and on that, the tax buoyancy that we have assumed is a realistic tax buoyancy estimate, that is about 1.15%. So total tax growth is considered to be 16.7%, 16.8% in that range. And going by the current tax trend, if you see, particularly let's say in the GST, in the indirect taxes, during the last 3-4 months, what the kind of the results that we have got, and also in the direct tax, about the GST figures, all of you, the people may be aware that for the last 2-3 months, we have given the collection of 1,20,000, 1,15,000, and then around 1,05,000, 6,000 in that range. On the direct tax collection side, by the end of January, we are now down as compared to last year. Only by gross tax collection is down only by 6.7%. And this gap is going to further narrow. So what has happened is that because of this collection efficiency, the improvement is not only seen in the indirect side, but also on the direct side. So the next year, if we have estimated 16.7% growth on the basis of a nominal growth of between 14 and 15%, this is realistic. Now, so far the expenditure side is concerned, next year we have estimated that our expenditure, higher expenditure on infrastructure, health and the other areas, it will be above 34 lakhs. So with the tax collection and as well as the non-tax collection, the disinvestment that we have shown the plan, based on that the revenue side is going to be quite realistic, and therefore the glide path, the next year 6.8%, and then going forward, we need to bring it to the a certain reasonable level. So I think this glide path is also realistic.
So the last bit of the part A of the speech of the finance minister clearly brought out all these aspects. And one of the aspects that we brought out was that in 25-26, we would try to come to a fiscal deficit which would be lower than 4.5%. So we are at 6.8% in 21-22. By 25-26, after a gap of three years, we reach a figure of 4.5. I think one of the questions that Sanjeev had asked was whether this glide path was achievable. I think it is very much achievable, and we have actually been very truthful while coming out with our numbers, and we have not tried to overestimate or to bow before the people who have been saying that we should not move away from the 3% fiscal deficit target. The point about the FRBM Act being amended, I think she's also come upfront and made that statement that we'll amend the FRBM Act. At this point of time, I would not like to say more than this aspect, that we will amend the FRBM Act, whether we keep a flexible target, we keep a fixed target, what target we'll keep. But it will be in the range of what she has indicated for 25-26, which is the last year of the recommendation of the Finance Commission.
Okay. By when do we expect the government to move on the FRBM amendment, sir?
So we would need to study. It is not only the target that has to be set in, there are some other issues also that would need to be looked into. So I think we can hope that in the monsoon session, we should be back to the Parliament.
Okay, monsoon session back to the Parliament with the amendment to the FRBM Act. Mr. Vaidyanathan, I hope you can hear me now. You're on camera, so do fix your screen and go ahead with your question for either the Finance Secretary or the Economic Affairs Secretary.
No, to both of them, actually. First of all, congratulations on a very bold budget. My just opening question to set the tone for the whole event, I want to ask you one question. Last few years, of course, things have been very bold. GST was a bold reform, and many other infrastructure developments over the last few years was bold. But this one, it hits it out of the park on boldness. I mean, agricultural reform about 2 months ago. This one talking privatization of public sector banks, general insurance, never heard of. What really, can you tell us an inside stuff about what really brought this sort of a boldness out of the government to do this? It has just taken it to another level altogether.
Who wants to take that first? Mr. Bajaj, would you like to take a shot at that? Give us the backstory of how you decided to finally bite the bullet on many of these ideas which have been on the wish list for long, but finally being taken forward in Budget 2021.
Mr. Vaidyanathan and I go back some time back when he was the head of the insurance company, I think ICICI. So we used to interact with each other. I have seen the insurance sector a bit. I think this discussion has been going on for some time, and it fructified at the time of the budget. Even the presentations that were made to the Prime Minister during the pandemic also had these options that were put forward to him. And I would say that it is a very bold political step taken by the government. The Prime Minister and the Finance Minister together decided that they would now like to go to the market and mention that they would like the insurance companies as well as the public sector banks to be privatized. I think the options that were coming to us were a little less bold, even from the private sector, where they said you could retain a golden share, that you could retain control, that you could actually remodel the boards and then try and reform the banks. But it was thought that after the merger of a few banks, so many banks were perhaps not needed in the public sector, and the private investment and the private initiative should usher into this sector. And I think this is a step that has been announced, and I hope we should be able to carry it forward in the coming year.
Well, that's an interesting point that you make, Mr. Bajaj, that the recommendations that came in from industry were less ambitious in term or less bold, and the government actually went a step further in being able to take forward, what was not expected of it. You're saying that the suggestions that came in from industry were less bold than what the government has delivered on.
I won't say all the suggestions because I keep meeting a lot of people, and in my one-to-one conversation, I'm able to have much bolder conversations than I would say in a forum like this. So there were all kinds of suggestions that were coming. So, but I would say that nobody was expecting this government, especially after so many reforms and the kind of situation that we are in, to come up with this kind of a reform. So I would say that it's a very bold political step. And for getting to know the inside story, I think you have to come and work in the government. The lateral path has been opened up.
Yes, and since that's an open invitation there from the Economic Affairs Secretary. But Rakesh Jhunjhunwala, Mr. Bajaj and Mr. Pandey, I was just having a conversation with Rakesh Jhunjhunwala before we started the budget town hall, and he was very clear that this is a political message that the budget sends out. Rakesh, go ahead. The Secretary is listening in.
So the first question, sir, I have is that why have you been so pessimistic in the estimation of tax collection? Sir, I think your tax collection in the current year are going to be at least 1 lakh crore more than your estimates, and at least 1 to 1.5 lakh crores more next year, sir. Because the direct tax collection is only 6% down now, and with the kind of profits companies are having, the last installment is going to be a real bumper installment. Last installment advance tax. Sir, and second thing is that you have announced such bold measures, for which I congratulate you and the entire bureaucracy and the government, especially the Prime Minister. But sir, have we laid down a path or a dates by which we are going to do all this? I mean, suppose to sell the banks require parliamentary permission. So sir, when are we going to introduce the bill? Because, we got to stick on the timelines for this. Otherwise, it becomes, and, these are bold steps. The faster they're done, the better. Otherwise, politically, it'll become a hot potato. Somebody will come up with a new agitation like the farmers and try and stop all this. And sir, I tell you, I do not, I think India, with your budget, India is on the path to double-digit growth. I can lay a bet with anybody. The next 3 to 4 years, India is going to have double-digit growth if we fulfill what we have promised in this budget.
Okay, Rakesh, let me put those questions to the secretaries. Mr. Pandey, let me get you to respond to the first question that's coming from Rakesh Jhunjhunwala on why have you been conservative as far as your tax estimates are concerned. He's willing to lay a bet that you're going to do much better than what has been estimated. And then, Mr. Bajaj, I'll come to you on the timelines and the execution roadmap for some of the reform decisions that have been announced in the budget. Mr. Pandey, first you, sir.
No, in fact, in Hindi there is a proverb that, unke muh mein ghee shakkar. So, you see, when we started this budget exercise, this exercise gets started, way back in the month of November. So, if you have to see the November, December, the kind of situation that we were in, even in January, this corona, then, the new variety of corona, the whole world getting impacted. In such situation, what you have to come up with some kind of a realistic estimate, because in the past we have there have been talks saying that the estimates that the Revenue Department gives, the government gives, they are unrealistic. A lot of things are, and this throws the government finances, not only of the union government, also the state governments into a very, very difficult situation. So we needed to come out with a certain realistic figure.
You can say that we have been slightly conservative, but I can say that if we generate more money, we will spend more on infrastructure. So our ambition to spend more on infrastructure to create durable assets which have multiplier effect remains there. On the timelines, the second part of your question, I would, before I answer that question, I would like to tell Mr. Jhunjhunwala and to all of you to keep reminding us of the question that you have asked every 15 days, every month. We would like to deliver, and we would deliver on the promises that we have made this time. But I think it's the job of the media also to keep pushing us to that direction, and I'm sure you'll keep doing that. Coming to the figures that we have taken for this year, we have just taken 1,75,000 crores. And let me say that there's a pipeline already on. The pipeline has some major disinvestments, which is the BPCL, Concor, Air India, BML, Pawan Hans, and a few more. And I have not mentioned LIC and IDBI, which also should see the light of the day within the current year. So even if we do that, maybe we will exceed 1,75,000, not talking about the two public sector banks and the insurance company. The whole idea now is that on the asset monetization as well as strategic disinvestment, we want a pipeline ready. So let the water keep flowing through this pipe. It should not happen that it comes for an hour and then for 12 hours there's no water. So let it happen. If something comes up in the month of March 21 or March 22, it's fine. If something even comes up in June 22, that is also good. So we will continue to do this. And you might say, based on the record that we have had, that it has not been good. But this year you should agree that it was the COVID year. A lot of people have to come and do their due diligence. For they say that once COVID period is over, we would like to come and actually have a look, because for Air India, they want to see each plane. They want to see the parts that are lying there. So I think this was a difficult year, but I'm sure with the pipeline that is already on, we should be able to achieve. And the new pipelines also, we will ensure that we stick to the timelines.
Mr. Bajaj, just a quick follow-up on IDBI Bank, sir. What is the process going to be? Will you invite EOIs for IDBI Bank as well?
Yes, IDBI Bank is now for strategic disinvestment, I think. I think LIC and Government of India maybe together would go for it. It is not a giving up the Government of India shares on the stock market. It is not that. It's basically the Government of India share would be given up, and I'm sure LIC would also join.
Correct. Health specialists on the panel, Dr. Balal and Amira Shah, are here with us. Since health was the other focus area that the government has decided to prioritize in Budget 2021, Amira, let me start by asking you to post your question as well as your comments.
Thank you, Shireen. I think my question is, firstly, thank you so much for a fair budget. I think there's definitely a higher allocation given to healthcare, which is truly welcome, I think, by the whole country and all the citizens. As we all know, this is an investment that we need to be making for many, many years to come. I had two questions. Number one, private sector has obviously played an enormous role in this last year, in 2021, not only from a vaccine, from a diagnostics, from hospitals, from pharma, from every angle. And as we know, private industry in healthcare actually contributes almost 70% of the services in India today compared to the public sector. I think private industry would have truly welcomed just some recognition or some impetus to continue to grow and show this commitment towards all our citizens into the next year as well. It could have been by very small movements of, for example, GST, for example, all healthcare providers, we'd have the input cost, but we don't charge anything to customers or to patients. This just adds an additional cost in healthcare, and it's something which can't be collected back. Could the government do certain impetuses to help private healthcare continue this commitment into the future?
Again, the tinkering with this GST tax rates, I think, we have to, avoid this. And, in this meeting itself, you have seen that on one hand, we are talking about the stability in the tax rate. For example, in the health sector, what we have done is that we have provided a tax exemption so far as the delivery of the services are concerned. Now, but then I mean, I see no connection as such as to, why, the GST rates on the inputs which are purchased by the health provider, that should be exempted, because that will be further distortionary. So I think, I mean, the businesses have to be organized in that manner.
So my question is, are we reading it wrong? That this is coming out of this belief which emerged out of the fortuitous circumstances in the most grim atmosphere of COVID, which means the kick start of the formal sector, the reforms, and so on. And based on that, the belief that even if with 9.5%, the rupee did not fall, interest rate didn't go over, economy started working on itself, which means this government has discovered and determined that our economic policies make sense. They may take few years, a few quarters here and there, and that demand, democracy, and demographics have real meaning. And that is why all this fiscal deficit, etc., have limited meaning in the context of national aspirations. And that's what you have gone for with higher capital expenditure, higher budget deficit, and pushing the budget deficit limit to all the way to 4.5% in 26. It's a staggering amount of deficit room that you've created for yourself. But are we getting carried away? That's my first question. Second question again is the euphoria in the market is not as much for earnings as for this attitude. And the second was real commitment to ease of doing business. Some of the small changes that have been announced, I do not know whether to call them small, is the change as in advance tax for dividend earners. The transparency of bringing on the FCI debt and maybe NI debt and other debts over a period of time. Or correction of custom duty, the distortions that may have been a result of various factors, whether lobbying, pressures, whatever, etc. But converting it's a massive exercise that the government has announced. And which is what gives the confidence that the government is now not doing just lip service, but is committed to creating ease of doing business. And second, as I said, the self-belief of, national economics.
Okay, Mr. Bajaj, let me get you to start by responding to the point. You've already addressed that at the start of the program, but for Mr. Bhansali's benefit, he wants to know if we might have gotten carried away a bit on the higher side with the kind of fiscal deficit that you worked in.
I am not sure, but I think Mr. Bhansali first answered this query before he raised that query. So I have nothing much to add to what he actually said, that the fiscal deficit that has gone up this year is also on account of the pressures that we had on the revenue figures and also the need for doing excess expenditure for the vulnerable section and for health infrastructure. For the next year, we are actually going for a greater impetus on infrastructure spend and other spend which would lead to multiplier effect. So I don't think so. And you very rightly said that the markets have been very calm and have taken this stance of the government and the intention which has come out in the budget as a real one.
Final question to the both of you. And I'll start by asking you, Mr. Pandey, what was the hardest part of putting this budget together?
No, I think, the direction was very clear, in the sense the direction in which we wanted to go. And particularly if you see the last 10 months, we came out with the series of intervention through the various packages, or each package itself could be termed as a mini budget. So I think, and a lot of preparation had gone into the making of this budget. And we wanted this budget to be something, not only an incremental budget, but, it's, giving a completely a new direction. I would say, it kind of a quantum leap kind of a budget, reform budget. And that is what exactly, what we were working for the last 6-7 months. And finally, this is not something which could be done only in, let us say, in 1 or 2 months. This is exactly, many of these things which you have seen in the budget. It may look, something which, very, very simple, but a lot of groundwork has gone into this. and for each component, and very, very carefully thought, be it on the on the financial sector side or the infrastructure, or be it on the the taxation side, disinvestment side. So each point was very, very thoroughly debated within the ministry, with the other stakeholders, other ministries, and then finally we could come out with this kind of a budget.
Well, Mr. Bajaj, you know, the finance minister had promised a budget like never before. How much pressure did that put on you and the budget team?
Okay, let me share a secret which I don't know whether I should be sharing that with all of you or not. The maximum time that I spent with my family was during the last few days of making the budget. And my family actually was doubting whether I was actually involved in making the budget at all or not. So the kind of things that Dr. Pandey has mentioned, that the preparation was going on for a long time, and we didn't have the pressure at the last moment. And so my personal staff on the last day was very surprised when I came in the afternoon and left in 2 hours' time, and they were quite amazed as to whether nothing was supposed to be done that day. So it was a good experience overall.
Well, that's an interesting backstory. Thank you very much, Mr. Bajaj, as well as Mr. Pandey. Welcome back. You're watching the CNBC TV 18 Budget Town Hall, and it's time now for us to welcome on the program the CBDT Chairman, Mr. PC Modi. Also with us, Dinesh Kanabar, Rakesh Shah, and Mukesh Bhutani. Gentlemen, many thanks for joining us here. Mr. Modi, there's lots of questions for you, sir. Dinesh Kanabar had one, so let me go straight back to him. Mr. Kanabar, you now have the CBDT chief, and you heard from the Finance Secretary that make your representation to the CBDT Chairman. So go ahead, sir.
The questions which I had for you is, with such a nice budget, such a nice background, right direction, there are a few things which have been done, which in my view could have been probably approached slightly differently. So for example, sir, we have yet to see the changes that may be required to the act, given the fact that there are many people in India on account of inability to move out because of COVID. And we need to sort of relook at how India will approach permanent establishment, place of effective management, business connection. So while we made some changes earlier on with regard to the taxation of the individuals, we haven't sort of addressed this larger issue, which OECD has recommended. Also, there was this change with regard to not allowing depreciation on goodwill, which is sort of overturning a Supreme Court judgment on the issue. The way the definition has been worded, there seems to be some sort of a gray area as to how much retrospective is it, because the definition is way back from 1998, whereas the application is prospective. I wanted to know if there were some thought processes in this regard.
Ani, so far as the issue of permanent establishment or the period of stay creating some sort of a permanent establishment, you would recall that in the past, in the last financial year, we did come out with a beneficial circular. Of course, that circular is yet to come so far as this year is concerned, because I would expect the normalcy to return first, and when the international travel is again allowed, I think that is the time when we can take a good call as to what should be included and what should be excluded. But such a consideration can take place only once the normalcy returns. So far as question on depreciation on goodwill was concerned, I think it was more of an anti-abuse provision. The instances which had come to our notice in the past did indicate that it was not the intention ever that such a kind of provision should be kept in place. Moreover, wherever the goodwill has been acquired, and that cost of acquisition is well recognized. It is only in question of an artificial creation of the differential which is termed as goodwill? That is the question.
One simple exception, which I think, sir, has been left out, is that a lot of corporates have been spending money on COVID relief. Why not just make that expenditure tax deductible? This is expenditure which is working, corporates working shoulder to shoulder with the government. We are not asking for any incentive, no weighted deduction, no nothing. But if corporates spend money on COVID relief, whether it is to their employees or elsewhere, that expenditure being fully deductible is only a very fair ask.
We want to move away from the regime of deductions and exemptions and give a much competitive tax structure in terms of rates and try to make it as stable as we can. But certainly deductions and exemptions through the taxation route should really be done away with in a phased manner as we are doing it right now.
Mr. Modi, it's always a pleasure. Many thanks for joining us here on CNBC TV 18 and appreciate your time. You're watching the Budget Town Hall here on CNBC TV 18 and we're in conversation with the DPAM Secretary, Mr. Tuhin Kanta Pandey. Mr. Pandey, many thanks for joining us here on CNBC TV 18. Let me ask you to first give us clarity, sir, on what has been promised for the last year, and that is IDBI Bank. When can we expect this process to move forward? Will you be inviting EOIs for IDBI Bank? How is it going to work?
Well, I think the IDBI Bank was announced last budget. Thereafter, we have looked at, the various legal issues involved. And I think we need an amendment of legislation, and that has been taken forward in this Finance Act, which requires a license to be continued under the IDBI Repeal Act after the disinvestment as well. And I think that was a major issue, and we should be moving forward soon on that.
Okay, so as far as IDBI Bank is concerned, the passage of the Finance Act will be all that is required in terms of legislative changes. No other legislative change will be required.
That's right. And I think then we have to take a cabinet approval and move forward.
Okay, and you will be inviting expressions of interest for the same?
Well, I think once the cabinet takes a decision, we'll move forward.
Okay, once the cabinet takes a decision, you'll move forward. Let me now talk to you because we've got a banker here with us, Vivek Dinathan of IDFC Bank, watching what you're saying very closely. And, this was a question that was raised earlier on the program as well. While the intent has been made in the budget on the privatization of 2 public sector banks as well as 1 general insurance company, there is no timeline that has been specified. So what is the target that you're working with in terms of being able to get this done? Because this doesn't come under the 1.75 lakh crore disinvestment target that's been set out by the government.
I think the Department of Financial Services will be taking a call soon on that, and that will also require a legislative change so far as the banks are concerned.
And do you feel confident now about LIC IPO, sir? Because, that was a promise made in the last budget. You've only now moved towards, the process of appointing advisors and so on and so forth. So how confident do you feel about the LIC IPO going through?
Yeah, I think the announcement by the Honorable FM in the last budget, the various issues were to be sorted, so the advisors were appointed, and I think they have done a fantastic job of identifying all those issues on which LIC is to work with. So we have also appointed the independent actuarial firm, which will have to report the Indian embedded value, which is a requisite thing for the IPO. LIC is separately working on several of those things which need to be enabled before the IPO in place, and the amendment has also been on the LIC Act for the purpose of IPO has been a part of the Finance Act as well. So I think the work is going on all sides, and we hope to have an IPO in FY 21-22 as announced by FM in the budget speech.
Okay, so you're hoping that it will fructify in this financial year. Let me also welcome the DFS Secretary into the conversation. Many thanks once again for joining us here on the program, sir. And, you know, many questions have come in on the ARC, AMC. In fact, this is what we are picking up, and I would hope that you can give us more clarity on what we've already discussed. Banking sources suggest that the ARC AMC will clean up NPAs and may require about 10,500 crore rupees of capital. The ARC may buy large stressed assets of at least 1.4 to 1.5 lakh crore from banks. Can you take us through some of the details, sir?
Yes. So what the bankers are actually looking at is that there are about more than 2 lakh crores of legacy NPAs, which is sitting with the banks, and the resolution is taking time. Now, multiple lenders, so there is no unanimity of the decision, and therefore it delays things, and the resolution, there is an erosion in value of the assets. So ultimately the lenders are going to be the losers. So what they have now decided is to set up an entity which will be an ARC and an AMC. What does the ARC do? That the ARC warehouses all these stressed assets, and as you have rightly pointed out, these are assets which are more complex and which are of the ticket size of more than 500 crores. So these are large assets and complex assets. So it requires the domain expertise to resolve them as well. So the idea is to move these assets. If all the banks, the private and public, put together, which are the consortium which have lent to these projects, I mean the average holding is about 80% will be with the public sector banks and 20% with the private sector banks. So what they propose to do is move these assets to this ARC, and thereafter it moves to the AMC. The AMC in the interim will try to operate those projects, those assets, and thereafter through a market price discovery mechanism dispose it off either to a potential investor or to a AIF. So the whole idea here is what is happening is the consolidation. Otherwise, one individual lender can say, sorry, I don't want to go with you. Then it gets stuck. So as a result, it may take 8 years, 10 years to resolve, and by that time the value would erode. So here the whole idea is that all are getting together, so it moves to the ARC and then to the AMC. AMC with a team of dedicated professionals operate it, preserve the value or even enhance the value, and then sell it off. So the aggregation happens, and there is a time-bound resolution of these assets. So that is the whole concept behind this AR-AMC.
DFS Secretary, let me come back to you now and ask you about the timeline that in your opinion or estimate would be a realistic one to get the process of privatization of the two banks as and when you decide to identify them up and running. What kind of legislative changes will be required? I would imagine the Bank Nationalization Act. If you can take us through what we should expect and give some clarity on the roadmap.
You see, regarding identifying the banks which are to be privatized, there is already a clear-cut policy laid down by the government very recently, and it has to go through 3 committees. First, it will be the NITI, then it goes to the committee of the group of secretaries on disinvestment, and thereafter it goes to the alternate mechanism. So, obviously, these committees will look into the pros, cons, and do all the evaluation and arrive at a identifying which are the banks, and it will be taken, decision taken at the highest level. So that process will also begin parallelly. And as far as the legislative amendments are concerned, you have named those 2 acts are the principal acts. So we look at those. We have already started working on that. And wherever the amendments are required, we will make the necessary amendments to facilitate the privatization process. And the same would apply also for the insurance company. And when do you hope
to move the amendments?
I mean, I cannot give a timeline straight away right now because these are just early days. The announcement has been made only yesterday. So we will obviously, go into the details and work out everything and try to take it forward as fast as possible.
Okay, gentlemen, we've also got Mr. V. Vaidyanathan of IDFC First Bank with us. Mr. Vaidyanathan, go ahead with your questions for the DPAM and the DFS secretaries.
I didn't think of a question until you lobbed it at me just now, but I have a comment actually to make. We saw DFS secretary in action when the emergency credit guarantee line was being implemented, and it was a very important program to be done with a lot of detail, and we saw the level of detail he could get into and the kind of a kind of rigor he has to make things happen. So, of all divestments, privatization of state-owned banks is one of the toughest tasks to do because the number of complications involved, the number of parties involved here. I'm pretty sure, having seen him at work, there's no doubt the government will pull it off really very well. And second thing I want to say is that this is a landmark event. I mean, the other divestments are a divestment, but state-owned bank divestment is a big statement and compliments.
Well, DFS Secretary, let me ask you, what are the challenges that you foresee? I mean, the legislative process, of course, will have its own, complexities to deal with, but what are some of the challenges that you foresee as you move down this road? I mean, for instance, today the Swadeshi Jagran Manch has come out and issued a statement saying that they don't welcome the government's decision to privatize the banks and the insurance company. So what kind of complexities and challenges do you envisage on this front?
Well, see, as Mr. Vaidyanathan pointed out, this is for the first time we will be going in for such kind of a privatization. I don't think it has happened in the past. Banks have either been amalgamated or, reconstructed, but never a privatization of this sort has happened. So it is definitely a challenge, and there are complexities. There are lots of issues which we need to factor in as we go along. And of course, legislative amendments or changes will enable moving forward in this direction. But there may be other issues also which I cannot at the moment foresee and spell out everything. But as we go along, we will list out what are the other issues that we need to look into. And of course, we will be working closely with DPAM to see that the maximum value is extracted, as far as the government is concerned. So that's how we propose to proceed.
Mr. Pandey, the same question to you. As you move forward on this path of strategic disinvestment, the good thing is that there is now a policy in place which lays out a process. But what do you believe will be the big challenges and complexities that you're going to have to deal with as you move forward on strategic disinvestment?
Well, I think the new policy which FM has announced is quite a landmark policy. Probably after 91 reforms, a very clear statement that the government would actually retain a bare minimum presence in a set of strategic sectors which have been identified based on national security, energy security, critical infrastructure, and financial services, and leave the rest and exit the rest. Even in the strategic sector, it's only the bare minimum presence. So it's basically a statement of intent that in a way there was decades of nationalization, and there could be now Indian economy and Indian system mature to a stage when we are aspiring to be a 5 trillion economy, is to embark on a path which will charter a new beginning for Atmanirbhar Bharat. Basically trying to maximize growth, trying to maximize production, productivity, efficiency, and growth and employment. So this is a policy which will actually guide over the next few years, is how we would be putting our strategic disinvestment program on focus, because I think in many respects that's a program which will take us forward on the growth path.
Yes, and of course, there is also going to be coordination between various ministries when it comes to things like land monetization, etc. But DFS Secretary, I wanted a clarification because people have been listening into you and tweeting me, asking me, are you sure about the 100 crore rupee capital requirement? Because the expectation was that it would require significantly higher capital support to get started, the ARC structure.
No, you see, what I just mentioned was it is a 15 85% cash and SR deal. Right, 15% is the cash deal, so that becomes a cash neutral for the banks. They put in that money and they get it back. 85% of the net book value is what will be issued in the form of SRs. Right, so there is no involvement of any kind of cash that is required. So after that, whatever provisioning has to be made for that value, the net asset value rather, will have to be made by the banks, for which the regulator may ask the banks to make the provision. Now the banks, some of them, as I said, have already provided up to 100, and for some assets it's up to 80, so another 20% may be required to be provided by the banks, for which the banks may come to the government to extend some kind of support by way of capital or by way of a guarantee also. So even a guarantee could help to satisfy the regulator that in the event of they are unable to make that provision, the government will chip in to provide that capital. So therefore it begins with a cash neutral solution to the problem, and thereafter the money which comes back into the system is something which the banks are going to gain for assets which are lying idle for quite a long period of time. These are all legacy NPAs. So that's how it works.
Thank you very much, Secretaries, for joining us here today to explain and give more color on some of the crucial announcements that have been made in Budget 2021. I think the heavy lifting will have to be done by you two gentlemen to get some of the bold reforms promised in Budget 2021 off the ground. So appreciate you joining us here once again. Mr. Vaidyanathan, on balance, what do you make of what you've heard from all the secretaries, both in terms of intent as well as the execution roadmap?
First of all, a big vote of thanks and thanks to every one of the secretaries, Mr. Ajay Bhushan Pandey, Mr. Tarun Bajaj, PC Modi, Secretary DFS, and other secretaries who spoke today so candidly and transparently and patiently answered the questions. Now, the key to your question about what struck out, there were 3-4 things that struck us from the budget. One was, the focus on ease of doing business. Second was serious investment on health, 50,000 crores, 35,000 crores, 2 lakh crores on production-linked incentives, inclusive development, R&D, etc. FDI insurance. There were so many things here that it's difficult to encapsulate them all. But the key one that really struck a big note was the boldness with which they said IPO of LIC, IPO and privatization of 2 state-owned banks, 1 general insurance, Air India, BPCL, Pawan Hans, IDBI. When you see that sort of talk being done, it's never been done in 50 years, Shireen, just to point out, never been done in 50 years. Nobody uttered the word privatization of banks before. It's a very big statement. And therefore, that boldness stood out. The second thing is, I think, from the Prime Minister, Finance Minister, and all the secretaries who worked on it, really the boldness stood out. The other thing is that now that the other really amazing thing they've done, I feel, is that knowing fully well that they've got to sell, they never disturbed the markets. They kept the markets happy and going and motivated and didn't touch any tax structures. I think one of the plans of divestment should have been to also keep the markets buoyant. And I think on that front, they've achieved huge success already to start with. The third thing that comes to my mind is that is really that our expectation now that this bold one, agriculture has been announced, dealing with it. I'm sure they'll solve it. Privatization, state-owned banks, etc. Yeah. With this, expectations have gone up. I say, and it's a very big thing because now we know this government's really very bold. They can do bold things. So we feel very proud and thrilled as Indians that our government can also do these things, and we can match other countries and say, here we come. So we expect a lot because of what you've shown. Thank you very much from all of us.
Well, Mr. Vaidyanathan, many thanks for that comment, and many thanks again to the secretaries for joining us here on the CNBC TV 18 Budget Town Hall. We appreciate your time and we wish you the very best of luck. We are going to take a break. Don't go anywhere. We'll be back in a moment.